Hello, everybody. Hope you had a great day today. It was a very exciting day in the market. The indices fluctuated from being down 1.5% to being up 1%. We ended up closing with the Dow down 0.83%, the S&P down 0.63%, the Nasdaq down 0.63%, and the outperformer for the day was the Russell, which ended up 0.14%. That actually pretty much tells the story that I want to tell today. And here on these two charts right here is part of that story. On the right, we have Ross Stores. They had earnings after the bell. And Ross has always been almost a safety position where you know that Ross Store outperforms during times of stress. Rather than customers going to Macy's or shopping for clothes that are very expensive, they go to a store like Ross, where you could still get quality stores that for some reason have been discounted, and you get them at an excellent price at Ross. Well, it has been for many years considered a safety position, and today, after the bell, it had earnings and it went from a high of 98 for the day. After hours, it dropped to $70.80, and it is still dropping. Just to give you an idea, 127.58 is the most recent high. It has been an absolute outperformer. 134.22 is its high, and that wasn't that long ago. It was in April of last year. It was at 134. And it has just been getting absolutely decimated. The COVID low is 56.3. It had been performing well, as you can see. It had been performing well during these last few months where the market was struggling. But today, the market said, "You're done. We want to sell you off. There's no need for you anymore." Now, why is the market discounting or throwing away a safety position? And then we go over to Palo Alto Networks, who also had earnings after the bell, who has not performed as well over the last few months, but jumped from 435. 421 was the low of the day. It closed at 435, and after the bell, it jumped to 489.50. This is the story I want to tell today. The safety position went down after hours. The technology went up after hours. That doesn't look like investors are worried about recession and a continuous downtrend. Am I saying there's not going to be any more downtrend? No, that's not what I'm saying at all. I'm saying this doesn't look like there's a lot of people worried about continuous downtrend. We know the psychology of the market is very negative right now, but I don't think big money is very negative right now. When we look at the heat map here, we can tell that materials were up, healthcare were up, and consumer discretionary was up. Those were the outperforming sectors, and technology was not the leading sector, but that technology not being the leading sector was mainly caused by the mega cap stocks not performing well. Apple being down 2.46 puts a big drag on the entire market. But you could see here the microchips are turning around. Nvidia was up 1.1, AMD was up 0.41. AMD just got a recent upgrade. Not all of technology was down, but when you have the mega caps down, technology as a sector is going to be down. Consumer staples was crushed again with Walmart, Target. The retailers are just absolutely being crushed. That's part of the story that we are seeing right now. But like I said, there is a psychology in the market, and you need to be aware of that psychology. Where are we on this chart? This is the psychology of the market. You know, we go through euphoria, which we had in December when everything was going up. We have that first drop in January We bounced off that first drop. We were complacent. We bought the dip, and then we had a drop. And you go into that anxiety phase where you're wondering if did I do the wrong thing? What's happening? You go into the denial. I can't believe that my position is down this much. I can't believe my portfolio is down this much. This isn't happening to me. You go into panic. The panic mode, where I've been hearing so many people panicking about their positions, and then capitulation is the moment where I've been hearing people left and right cutting their positions at a loss. And I keep telling everybody, if you're selling now, you are selling at the absolute bottom. No, that does not mean I think that the market has hit bottom. I'm not going to call the bottom, but I think we're at the bottom. You start getting angry because you lost so much money. But I have to remind you, you didn't lose it unless you realized it. You start getting into that depressed state, which we talked about earlier today. You sold your positions at a loss. You're feeling bad because you lost a lot of money. And right when you sold it, you start seeing the market going up. And as the market's going up, you start going into disbelief. I can't believe I sold at the absolute bottom. I can't believe I bought at the absolute top. I can't believe I sold at the absolute bottom. And then you buy up here, and guess what? It's time. It's time to take a dip before we head back up. And you go through that whole cycle all over again. So if you haven't sold at this point, the message I'm trying to give you is hold on. We're almost there. Just hold on. We're almost there. There are signs that lead me to believe that we're almost there. One of those signs, like I said earlier, the Russell was the outperformer. If you look at the Russell, it is the index that is farthest from the bottom. The Russell made a bigger movement up on this most recent drop, or this most recent climb. It actually almost hit the 20-day moving average, which is the only index that did that. It is further from the bottom, closest to the 20-day moving average than any other index. So this Russell outperforming is one of those things that I've said it before. When the Russell started dropping, I said, the market's going to drop. Not because the Russell leads them, but because the Russell is that canary in the coal mine, like you hear on CNBC and all those other news channels. It's that indicator that tells us where the mindset is. And there's so many positions that are beat up right now that look so attractive, that are at such a good price, that people are starting to buy the risk a little bit. The NASDAQ also is further from the bottom than the S&P. The S&P actually went down almost to the absolute bottom. On the ES, it was 1.1 cent away from hitting a bottom. Instead, what it did is this beautiful opportunity to hit a double bottom. It's not a guaranteed double bottom until it goes over 403. We did struggle at that 392 mark today, and once we cross that 392 mark, I think we'll have a quick rally up to 403. I think that gap right there, that movement right there, will happen very fast. That's just my opinion. It's right up at that 20-day moving average. And you can see right here how, this is what I was talking about earlier, how far we are from the 20-day moving average compared to the Russell. On the Russell, we're almost at that 20-day moving average. And I think we're going to get there first on the Russell. The S&P, if we go up tomorrow and we start closing near this 403 range, it's going to look like a beautiful double bottom. And it might not be the absolute bottom. More than likely what we'll do is come here, retest, and move up. That's the scenario that I want to see. But of course, the other scenario that could happen is we can move up and come down to the next level, which is 370. The ultimate level that I think that is the most extreme scenario is the 350 that gets us to the 200-day moving average. But I'm going to erase that and say that I think tomorrow we're going to move up towards that 403 line, get close to that 20-day moving average, and then that's where the battle is going to take place right there. Something also exciting that happened today is the Dow Jones finally hit 15%. 15% is what we consider a correction, and it is the average correction. And the Dow Jones was the only index that had not hit 15%. Well, because Walmart dropped so much and Apple dropped so much, it dragged the entire index down. You see these big red candle that we had. And as soon as we hit that 15%, we overshot it a little bit on the overnight session and bounced right off of it. So now that the Dow Jones has hit that 15% mark, I believe the correction is complete. I don't think we have any more unfinished business. All the targets that we had have been hit. It has been methodical. It's been one sector after the other. Now the only sector that's not red for the year is energy, and that has to do with oil and gasoline prices. But every sector that was green, that was outperforming, which was materials, metals, the consumer staples, those have all just turned around in the last few weeks and have decided that they wanted to join the correction. They brought the entire index down, and now I think it's time to turn around. Again, understand where you are on the market. On the chat, on the Discord, I've been telling everybody I've been entering and exiting positions the same day. I'm not holding overnight. I'm trying to exit every trade that I enter. Trying to exit it every day before the day. Today was a really good day. Had 22 trades. 21 were closed in profit. 1 was closed at a loss. But I am not going to take a chance and try to take that position into the next day, when in a market like now, we don't know what it's going to do. These candles are massive, and if you hold overnight and it goes against you, it can go against you really, really bad. So continue to be safe out there. Close your positions, take your profits. If you're down on a position and you want to hold on to until it recovers, just make sure you're realistic with your position. If you're holding a stock like Ride, I doubt that it's going to go to all-time highs. If you're holding a stock like Apple, hold on. It's gonna go back to all-time highs. It just is. It always does. Regardless of whether we go into an extended bear market, regardless of whether we go into a recession, the market has gone through many corrections, many bear markets, many recessions, and it has always come back stronger. It has always made all-time highs afterwards. So stay strong. Keep communicating with everybody on the chat, and we'll continue to work through this together. Have a great day, guys.